Good morning and happy Easter. This is Chris Robinson, Rob's Ag Marketing, with today's Monday, April 4th. It is Easter Monday. A lot of the world is going to be still not working, so we could get more thin and choppy markets. Um, Overnight, I think the market was really driven by crude oil. Crude oil had a $7 range from 108.90 to 115.50. We're trading at 110. Good news, bad news. We still haven't taken out 120. Um, Bad news is we have to wait and see what happens on Tuesday with the new deadline with President Trump. We did get some good news over the weekend. I don't care what your politics are, but when they rescued the second pilot, that has to be good if you care about America. Again, I don't care what your politics are, but that certainly was good news. Coming out of what is obviously a bad situation, right? So I think we can at least agree on that. In the grain markets, 7-cent trading range in corn overnight, the 10-cent range in beans and wheat. Market is just really trying to figure out what's going to happen with crude oil. This is I feel like I'm beating a dead horse with this story, but we wouldn't be where we are with these grain prices if it hadn't been for crude oil going from 55 bucks to 120, now sitting here at 110. We just wouldn't be here. A big part of this rally is because all this money has come into the commodity markets because that is their inflation hedge trade, their spec trade. And I've talked about this in my letter. Everybody's with access to the CME can see the size of the long bet that's increased in the grain markets since March, since late April, excuse me, since late February, early March. We have just flipped and gotten long for the funds in the wheat market. So the only thing they're still not long is cotton. They've got some more to go there, but a huge part of this rally in cotton to 1 year highs is because these guys had to cover 70, 80,000 contracts they were short, and so their blood has led um, cotton higher. So I did speak about it this weekend when I was on Market to Market. This is a gift. I don't know if it's going to last. If this situation ever gets worked out here in the Strait of Hormuz, we may get back to trading supply and demand, and then supply and demand is different than the fear trade of what's going to happen with crude oil. So take advantage of it. It might not last. I'm not calling a top. We certainly don't know if we're going to get a drought this year or not. I don't know. If you're interested, I did do a weekly wrap up where I went back and looked at what happened in 2012. If you want to get that, you can reach out to me, robinsonagmarketing.com. I'll send you a copy of what I wrote. If you want to get my daily letter, it goes out every evening after the close. I spend about 2.5 hours on it. I go through all the charts. I do all the analysis, so you don't have to. Um, Moving over to the protein complex, we're going to see is cattle going to continue to go higher. June fat cattle made a new contract high on Friday. It's hard to believe, I know, but June fat cattle traded 246.32. April still has a way to go before it challenges the old highs, but you know, fat cattle, feeder cattle have just recovered from every little correction that we've had. If I'm watching April fat cattle, there's a gap up there which gets filled at around 249.20, and then the contract high is at 250.90. We'll see if we get there this week, guys. In the hog market, different story. April hogs had a really good rally from 81 to almost 100. This is 90 level. We're halfway back. We're sitting here. So there has been some, I wouldn't call it pressure. I mean, but certainly lean hogs have not been mirroring live cattle or feeder cattle. And if you look at the deferred hogs at 107, 108, again, we've had a little bit of a correction out there. We did trade as high as 113 and change um, back in the first week of March. We did have about a 38% correction when we dipped down below 106 and we traded 105 even. So I think that there might be some risk there with some more spreading where the managed money might buy cattle and then sell lean hogs against it as their spread. So just something to watch. Certainly with the prices where there are, they're still worth protecting if you're a rancher, right? So my name is Chris Robinson, Robinson Ag Marketing. Um, the last thing I'm going to talk about here is crude oil. Where is crude oil? Well, it's sitting right there at 111 as I talk to you. The spike high so far in this Iran war has been 120. The old high during the Biden administration when Ukraine first took off is, around 130, 132. And then the all-time highs back in 2008 during the great financial crisis, we traded just over 147. So if things get sideways, I'm sure the computers will take a look at those old highs. Again, I'm not predicting we're going to go there, but if things get sideways, these robots like to go after old highs on the charts. All right. This is Chris Robinson, Robinson Ag Marketing, 312-638-8868. If you're looking for help, give me a call. Have a great week, and we'll hope for the best here, guys. Take care.